Have you ever wondered where money actually comes from? Most people assume it's printed by the government or created when banks lend it out. But the truth is far stranger. The Federal Reserve can create trillions of dollars with nothing more than a few keystrokes, money that appears out of thin air and instantly becomes part of the economy. But here's the real question. If money can be created so easily, then who does it belong to and who owes it? What many people don't realize is that every dollar is technically a debt instrument. Someone owes that dollar to someone else. And the system behind it has been running for over a century, mostly hidden from public understanding. Even your tax dollars aren't just disappearing, they're feeding a structure far more controlled and intentional than most people imagine. Money created from nothing, yet powerful enough to shape your income, your taxes, and your future. It sounds unbelievable, but it's exactly how the system works. So let's break it down and uncover who really controls the money you think you own.
Now, let's talk about how money is actually created. The Federal Reserve doesn't just print dollars like in a printing press. Most of the money is created digitally, typed into a computer, appearing out of nowhere, without any gold or assets backing it. To put it into perspective, in just 2020 and 2021, the Federal Reserve created $6 trillion out of thin air. $6 trillion. That's not a misprint. They didn't mine it, they didn't earn it, they didn't borrow it from anyone. They just made it appear. But here's the mind-bending part. Every single dollar that exists is technically debt. That dollar in your pocket represents someone owing someone else. So if the Federal Reserve creates money from nothing, and that money is debt, the question is simple. Who is the creditor? Who do they actually owe? On the surface, it seems like a straightforward question, but when you start to understand how the system works, it's anything but simple. The money isn't owed to anyone outside the system. It's a loop that keeps generating more debt and more interest, and the government, meaning all of us, ends up paying for it. Imagine a flowchart where money is created by the Fed, sent to the government, then circulated into the economy, only for interest payments to eventually return to the private banks that own the Federal Reserve. That's the system in action. And if you thought the government simply prints money for spending, think again. To understand who really controls it, we first need to look at the Federal Reserve itself.
So, what exactly is the Federal Reserve? Most Americans think it's a government agency, part of the Treasury or something similar, but that's far from the truth. The Federal Reserve is actually a private banking system, created not by the government for the people, but by the biggest banks in America, for the banks themselves. Back in 1913, banks like J.P. Morgan, the Rockefellers, and even the Rothschilds lobbied Congress to pass the Federal Reserve Act. They sold it as a way to stabilize the economy and prevent bank runs, which did sound appealing after the Panic of 1907. But the real purpose? To give themselves control over the money supply. The Fed isn't just one building or one office. It's a network of 12 regional banks, each a private corporation owned by commercial banks. These banks include the giants you know, J.P. Morgan Chase, Bank of America, Goldman Sachs, Morgan Stanley, and Citibank. They aren't just clients of the Federal Reserve, they're owners. And as owners, they get guaranteed profits just for holding shares, even when the economy struggles. That means while you're paying your taxes, they're quietly earning a risk-free return. To make it look like the government is in charge, there's a board of governors in Washington, D.C., 7 members appointed by the president and confirmed by the Senate. But in reality, these governors set policy, while the regional banks, the private banks, do the actual work. They create the money, manage the assets, and hold the real power. It's a system designed to make it seem like government oversight exists while giving private banks ultimate control. And this control is exactly how they make massive profits from money that cost them almost nothing to create. Now let's break down exactly how the Federal Reserve creates money and how that leads to massive wealth transfers. Imagine this. The government needs money to fund its budget, but tax revenue isn't enough. Let's say they need $2 trillion more than they have. The Treasury issues bonds, essentially IOUs promising to pay back the money with interest. Who buys these bonds? Foreign governments, pension funds, mutual funds, and of course, the Federal Reserve itself. Here's the kicker. The Fed doesn't use money it already has. It simply creates the dollars out of thin air. It types the numbers into a computer, and suddenly, the Treasury's account is credited with $500 billion, or whatever amount they choose. No deposits, no gold, nothing. And then the government owes the Fed that money plus interest. That interest isn't part of the original money creation, so it has to come from somewhere else. Your taxes or more borrowing.
Think about it. You are working, earning money, paying taxes, and a portion of what you earn is going directly to pay interest to private banks that created money from nothing. It's like borrowing money from yourself but paying interest to someone else at the same time. And this cycle isn't a one-time thing. It's perpetual. Every time the government spends more than it collects, more bonds are issued, more money is created, and more interest payments flow back to the banks. The system is designed this way on purpose. It generates continuous wealth transfer from taxpayers to private banking institutions. Watching it in action is like seeing a river of money flow from ordinary people through the government and straight into the coffers of private banks, all under the guise of a stable monetary system. To really understand why this system exists, we need to look at history and see what happens when someone tries to challenge it. Take Andrew Jackson, for example. He was the only president to ever pay off the entire national debt. Sounds like a hero move, right? But shortly after, the economy collapsed during the Panic of 1837. Without a central bank creating debt-based money, the money supply contracted and the economy couldn't function properly. Then there's John F. Kennedy. He signed an executive order to issue debt-free money backed by silver, bypassing the Federal Reserve entirely. Only 5 months later, he was assassinated. Abraham Lincoln issued greenbacks during the Civil War to fund the government directly, and James Garfield spoke openly about the dangers of private control over money. He too was assassinated within months. Coincidence? Maybe, maybe not. The pattern is striking. Every time a president seriously tried to challenge the power of private banks or the Fed, it ended tragically. These aren't conspiracy theories, these are historical events. The lesson is clear. The banking system has maintained its control for over a century, and those who attempted to disrupt it face catastrophic consequences. Understanding this history is crucial because it shows how deeply the Federal Reserve and its network of private banks are embedded into the very fabric of the U.S. economy and why ordinary citizens are often completely unaware of the system that governs their money. Fast forward to today, and the system is bigger and more complex than ever. The national debt has reached an eye-popping $36 trillion, and it's still growing. Every dollar in circulation is tied to debt, which means the government cannot repay it without destroying the money supply entirely. That's right. If the debt were suddenly wiped out, the money we use every day would vanish along with it. And the interest payments alone are staggering, over $1 trillion every year, paid by taxpayers to private banks.
Think about that. Every year, your hard-earned money goes to cover interest on money that was created out of thin air, just for the profit of these banks. Where do your taxes go? Much of it flows directly to service the debt, feeding the very institutions that control the Federal Reserve. This isn't an accident. It's the system working exactly as designed. It's a carefully crafted loop of permanent debt and perpetual interest, transferring wealth from ordinary citizens to private banks for over a century. Charts showing the debt growth make this painfully clear, and if you visualize the flow of taxpayer dollars, it's like watching a river constantly draining from the public into the hands of a few powerful institutions. This is the hidden reality most people never see, and it affects every aspect of the economy, from infrastructure to healthcare to education, because the money that could go into these areas is instead funneled back to the banks. Understanding this is crucial if you want to see the full picture of how money and power really work in America. The problem gets even worse when you look at the math behind the debt. Every time money is created, it comes with interest that wasn't created alongside it. Let me explain. If the Federal Reserve creates $500 billion and lends it to the government owes that $500 billion plus interest. But where does the interest come from? That money doesn't exist yet. It has to be borrowed or created, which leads to even more debt. Every new loan generates an even larger interest obligation, creating an exponential cycle that can never be fully paid off. Imagine pouring water into a bucket with a hole in the bottom. No matter how much you pour in, the water keeps leaking out, and you have to pour even more to keep it full. That's the debt system in action. The total amount owed grows faster than the money supply, which means the government and ultimately the taxpayers are trapped in a system of perpetual borrowing. Every dollar of interest paid is a transfer of wealth from ordinary people to the banks that own the Fed. The system isn't broken, it's designed this way. It ensures permanent debt, continuous interest payments, and a steady flow of wealth to private financial institutions, all while keeping the appearance of a functioning economy. The deeper you look, the more you realize just how cleverly this loop has been engineered to benefit a small group of powerful banks at the expense of everyone else. So let's tie it all together. The Federal Reserve creates money out of nothing, the government borrows that money, and taxpayers end up paying interest to private banks that own the Fed. Every dollar in your wallet is more than just currency, it's a debt instrument, a reminder of money owed that can never be fully repaid. This system is designed for permanent debt, for endless interest payments, and for wealth to flow continuously from ordinary citizens to private banks. The more you understand it, the more it becomes clear who really controls America's economy. It isn't the president, it isn't Congress, it's the banks that own the money printers, the institutions that profit every time the government borrows. And while most people live their lives thinking they understand money, they're actually part of a system that has been quietly transferring trillions of dollars for over 100 years. If this perspective's changed the way you see money, if it made you question how power and wealth really work in the world, then share this knowledge, talk about it, and don't let it stay hidden. Subscribe to learn more about how the system operates and how understanding the Federal Reserve is key to understanding who really runs the country. Because when you see the flow of money clearly, you see who benefits and who pays the price.